Investors in resource companies have been disappointed in the way the relationship between government and big business has broken down over the last few years. One of the low points was the way Anglo American Platinum gave notice of its intention to radically restructure its operations. But a good working relationship is necessary for both parties. Rowan Williams from Nitrogen Fund Managers joins us to give us his views on the situation and perhaps how we can resolve it. Rowan, this is a thorny one. Yes. It has been around with us for quite a few years now, if you have noted. And I think the important thing is that there has been acknowledgement on both sides that the relationship is flawed and it needs to be fixed. Who needs to make the first step? And when they do, what does the other party say?
So if you look at how Anglo Platinum have attempted to address the situation, I think it shows you the fractious relationship between government and the resource companies, and I guess Labour is the third party to that.
Yeah.
And clearly Anglo is getting frustrated, I think, at the pace of the issues being addressed, and they were clear to point out that there have been working committees already last year and going back a number of years that indicated that the operating environment was getting more difficult. And as other commentators have noted, it was to some extent a negotiating gambit that they clearly got to a point where they were frustrated. So they made the announcement, I think, in full knowledge that it would elicit a reaction, and quite a strong one, from government, and obviously bring them to the table. So I think the resource giants are in the business of doing business, and they have to take action because they have shareholders to please, they have a number of stakeholders, and if the pace is too slow, they're going to attempt to force the pace of addressing the issues and change.
But it's a tricky one, isn't it? Because on the one hand, of course, Anglo Plat has to tell the stock exchange what they are planning to do.
Yes.
On the other side, the government is saying, you cannot treat us like the rest of your other shareholders. You can't wake up and tell us tomorrow that this is what we're doing. You needed to have talked to us first and warned us that this is what you were planning.
Yeah, so I think they may have attempted to do that, but in terms of when they get down and have the discussions, it's obviously not going at the pace, or they're not getting the results that they want, and they're having to force it. So it shows the dissonance, and the issues are almost intractable, I guess, at this point, which you're seeing it now reflected, I guess, in stock prices and more than anything the rand.
So you think this is signaling really that was missed by both sides? The other party didn't pick up the signals from the other side, and the other side didn't pick up signals on the other side?
Well, I guess in terms of a negotiation, at some point you negotiate, and you may not be able to reach agreement because you're too far apart, and the differences are sort of potentially irreconcilable. And at that point then you have to take alternative action, I guess. And I guess that's speaking to the issue. The platinum industry is structurally in a very difficult situation, and the resource companies have to take difficult decisions, and the government is saying you can't, or let's try and negotiate, and they're saying these are the facts, this is the money we have, this is how much we're losing per month, these are the actions we need to take. And I think government to some extent is not recognizing and fully understanding that. And clearly Labour obviously have to look after their constituents. They also can't swallow job losses, or even if it's not job losses, some reduction in wages. So you've got a situation where three parties want three different things and they're not able to reconcile. And that's what the risks are significant. The risks to mining in South Africa are significant, and I guess the broader impact that has on our economy. And that's being reflected currently, interestingly enough, largely in the value of the rand, less so in our bond markets and the stock market.
Well, just to come in here, I mean, if we look at this in context of what's happened, it seems that the three parties, there's just a lack of underlying trust. I mean, we saw what the unions did last year, and we saw the sad consequences at Marikana. Labour's unhappy with the situation. Big business, you can see the frustration from Amplats, and personally I think they might have been a little bit politically naive in the way they went about this. And obviously the government was clearly unhappy with the way this last episode transpired. So my question is, how do we get this working relationship back into shape? Do we need an economic codesa like we did at the start of the democracy, where we get everybody on board, thrash everything out in a conference centre, and really get joint mutual understanding on the path we're going? Or who needs to take the role here, and how do we get this right? Because we need to get this right.
Yeah, I mean, that is an important point, I think, for the future of the country and for us to move forward. Look, I guess we've had the NEDLAC following on from CODESA, and that's become less, functional, basically dysfunctional, and is not working. We've got the 60-day period that the three parties have agreed to work together. And it probably is an opportunity for the parties to try find themselves, because I guess it's a difficult situation. If through this process they can come to a better understanding, as you point out, number one, and I guess some sort of potential solution, some workaround for the situation, that could then form a blueprint for future types of situation, which are, and the broader, I guess, mining sector as well. So there are no easy answers, but I guess it's going to have to come through mutual understanding, and I guess each party is going to have to give up something. It appears that Anglo, maybe they were a little bit naive, and they've had to now put a halt to the proceedings and go into this consultation process. So they look like they are prepared to sort of back down a little bit and concede something. Labour, although the rhetoric coming out at this point, they're saying they're not willing to sort of give anything up, and we're not really clear. Government's been quite aggressive, and so maybe this is where you sort of throwing down the gauntlet or drawing the line, where people realize the seriousness of the situation, that will drive the parties together. And I think we do have a good opportunity with this particular situation.
Yeah, it's interesting for me when I watch Southern Africa, because I saw this happen in Zimbabwe between the Zimbabwean government and the white commercial farmers in Zimbabwe. They essentially tried to outstare each other, and in the end what we got was an economy that was brought down to its knees, and everything that they stood for was destroyed, both from the government side and from the commercial farmer side. So who needs here to make greater ground, to create that middle ground so these guys are able to fix it? How do we fix it?
Yeah, okay, so I think the miners, and Labour was quite sort of forceful in pointing out that the miners have benefited from being participants in the South African mining industry going back hundreds of years, basically. So I think there has to be some recognition from the mining houses for that. And both, obviously, as you point out, they're current participants in the South African mining industry as well, and all the implications that has in terms of mining license and the relationship they have with government. So politically, they need to understand that, and these actions, have further repercussions. So I think they do need to come to the party, and if it's through some sort of concessions, work training programs, accepting maybe, to some extent, lower returns in one part of their business for greater returns in the other part of the business, they'll have to balance it up. It'll be a commercial decision at the end of the day. I think government needs to accept that the South African mining industry needs to change structurally, and all the implications that has in terms of mining rights and how it's managed, and the constant debate around nationalization or super taxation. Yeah. It's also very difficult for the mining industry, creates uncertainty, which makes them reluctant to invest and I think have a longer term time frame. So if government can be clear on that, and I guess Pravin Gordhan at Davos last week tried to, I think, already sort of, allay some fears by saying that's off the table. So they need to, I think, be more committed to that and create an environment of less uncertainty. So that's maybe where government can come to the party. And then Labour, they clearly need to understand the situation, that it's not that the mines are making super profits, that they can afford to lavish significant wages on their constituency. And if you look at, for example, you mentioned Zimbabwe, how much miners are paid in Zimbabwe. South African miners are paid multiples of that. And to some extent, capital is global, and Africa is clearly attracting a lot of interest, investor interest, and the capital go where the returns are. And if that's not South Africa, it's going to be the rest of the continent. And I think you're starting to see that already. So that also needs to be brought to bear on all the parties to understand that. And hopefully rescue a situation. I think just maybe a ray of hope around it. Yeah. What South Africans are good at, and clearly from our negotiated democracy is that we're very good at reconciliation and seeing, the potential, that we have in this country, and that it's worth looking to find a solution, and hopefully bring that sort of culture to these discussions and negotiations and save the situation. But look, I guess
we need to find each other essentially.
Yes,
I think this is the main message.
Yeah. So and I think so people are going to be watching very closely the outcome of this situation, because it's sort of an indicator of how it's likely to progress going forward.
Yeah,
so
it's complicated, very complicated. Let's talk about the easier things. So how do we make money in this environment?
Hard questions out the way.
So
how do we make money?
Yeah, so look,
where do we put our money in this
so
environment?
I think, as you point out, it's a difficult situation. Risks are elevated.
Yeah.
And the sort of, the uncertainty is elevated, risks elevated, and capital's mobile. And I was speaking to some participants yesterday. I said, what happened to the rand yesterday afternoon? Because there's no sort of economic information really, material.
9:30 and it went.
This friend of mine was saying rumors are it's a global hedge fund that sees the rand is vulnerable and is selling off the rand. And you see it move 10 cents in, half an hour, which is significant in currency terms.
Rowan, you've got you're not expecting the rand to be weak just short term. You're actually preparing for sustained rand weakness. I wanted to ask you why, and I wanted to ask you what you're doing to structure your portfolio to capture that.
Right. Yeah. So that's sort of part of the thesis, and I guess a theme going into 2013. So. This whole issue that we've just been discussing, and you're seeing the impact that it is having on the rand, but sort of more medium term, you're seeing basically an improving economic environment, stemming China improving, and then that's having a better impact on resource demand, but because of the unlikely political situation in South Africa, that it's not translating. Normally you'd see possibly a stronger rand. And also better prospects in the Eurozone and in the US in terms of better economic prospects. And the rand has benefited, I think, in terms of up until now, recently, that we had a lot of political turmoil and we saw some sell-off, but it remained reasonably strong. Because of the relative opportunities in the developed world. Now the developed world's looking better. People saying we don't need to take this level of risk in this environment, and so we'll look for opportunities elsewhere. And it was the big portfolio flows into the bond market specifically, but also the equity market that was supporting the current account. And we have a large deficit, and I think we'll see that weaken. So structurally the rand is quite vulnerable, coupled with obviously the political uncertainty. So it's not that difficult to see a weakening rand environment. And it was a little bit surprisingly strong, even though it was weak at the sort of the end of last year.
Yeah.
But that enabled us to take the opportunity to cycle out some of the domestic equities into the rand hedge equities.
Would you quickly go so far as to suggest a time frame for this sustained rand weakness that you see?
Yeah, well, I think the entire year at least. We've seen it already. I think the rand's down about 8% on a trade-weighted basis.
But it's not a one-way bet yet.
No, not entirely. Okay. And the rand is volatile, and you hear all the commentators, Rob Davies, saying it's the volatilities that's the issue. But I think we'll see a gradual weakening over the year. I don't know what, I don't give currency predictions, but you'll be safer in terms of, I think, but the prospects for the global economy are better.
Yeah.
So the opportunity set in terms of being exposed to that is better. We still don't like resources because of the political uncertainty, though. So where do you go? So more basic type materials like a stock like Mondi, which primary listing in London, and exposed to paper and packaging cycle, and that's very much sort of global type demand.